Hello and welcome to Gold and Silver Assets. It's Sunday the 12th of January 2020. So we've had a very interesting week for gold with lots of volatility and a multi-year high at over $1,600. But can this continue, and is gold hot enough to melt further up? Well, I'm actually seeing something in the charts that make me think that actually there's a danger signal ahead for gold. So we'll start with the gold US dollar price on the weekly scale. And last week we spoke about this very heavy area of resistance overhead. We also spoke about this upward sloping trend line, and my thesis was that this trend line would also provide some overhead resistance. So what actually happened? Well, price did move further up. It tested that trend line, came down for briefly, but then we had some escalation in the geopolitical situation, and so as a part of the fear trade, price just shot up there. But with de-escalation, it promptly came back down again, and so price never actually closed above that 1576 level that I mentioned last week. So as a result of all this price action, on the weekly scale, we've got this shooting stars candle. And so by that, I mean that we've got a candle with quite a long wick and a small body and a small lower wick. So what does this candle mean? Well, as we're in an uptrend at the moment, and this could actually signal a reversal sign. And this can signal a reversal sign in approximately 60% of cases. But I think I'm more confident that this is a reversal sign also because we have hit some significant overhead resistance in two areas here. So if this is indeed a reversal sign, where do we go next? Well, before we look at that, I thought it was interesting in terms of the size of this candle. So the length of this upper wick is just over 3% of the price action. And so I started looking back further in terms of the price bars to look for a similar candle. And actually, it's pretty rare to find them looking like this. This is just a zoomed in version of what I've been talking about here. So I did look back, and the closest thing I found was this candle over here, and this was back in around 2003. So you can see it's not quite similar to where we are now in that we've got this triangle here, and this is actually a continuation of an uptrend, whereas the current price action is actually a reversal pattern. But what happened at this time was that price broke out of this triangle upwards, and we ended up with this shooting star. This was promptly followed by a large red candle, and then we saw a correction to retest the top of this triangle here before price continued further up. So that's the only example that I can come up with in the gold chart of this happening. If anyone spots any others that look similar to what we're seeing now, then please comment below. Let's have a closer look at the gold price in US dollars on the daily scale. And here we can see very nicely that that upper trend line did act as a sufficient resistance zone at 1576 US dollars. So the question is that going to hold? Well, what could happen next? I think there are two scenarios that I'm looking at here. One is that we get a consolidation. If so, I wouldn't expect price to go really below 1525, and so we might see action like this. But given that we've seen this shooting star on the weekly scale, I'm erring on the side of a much stronger downwards movements. And this might well be supported by the Commitment of Traders report, which has shown that the commercials have increased their short positions even more, despite this price action that we saw. So if that is the case, then I would expect to see a big red candle next week when we look on the weekly scale. On the daily scale, what could happen is that we actually get another test of this trend line before we continue downwards later in the week. But basically, I would need to see a strongish candle, particularly with it closing below the 1525 level within the next 1 to 2 weeks. And where would I expect price to bottom or bounce back up? I think there are two possibilities here, and it really depends on the strength of this down move. So the obvious one would be at the 1475 level, as we have plenty of support there. And I'm not actually ruling out price going even lower at 1360. So that is still in play, but really I think the first hurdle is going to be this 1475 level. But it really depends on what we see next week in terms of price action. So in summary, we need to really look for a red candle to confirm our suspicions of a further down move. Thanks for listening, and we'll see you next week.